Well, good morning, Vietnam. I'm just kidding. Good morning, everybody. This is Blake Morrow. I'm filling in for Dale Pinkert because it's Good Friday, and I don't think he's going to be here this morning. I mean,
It's
we
Good
didn't.
Friday, and you're saying he's not good?
He's not good. That's right.
Morning.
Look, if I had the opportunity to take today off, if somebody said, yeah, just go ahead and take today off, I'd have been like, okay, I get it. I totally get it. But I'm glad you guys are here. I'm glad you're here, Stelios. I see Steve is around. K-Man's here. Good morning, guys. How's everybody doing? Good
Morning.
Friday.
We're good.
Good. Hey, Kay, it's good to see you or hear you anyway. You guys didn't do the flow show today, did you?
No.
The only
Okay, all
webinar
right.
today is this one.
Yeah, I didn't think so. Today we were just going to do the, obviously F.A.C.E because of the jobs report today, and it's going to be volatile. I was mistaken. The other day I was thinking that all markets are going to be closed for today, but actually some of the Globex markets are obviously open. We're seeing the S&P futures move around. They're only open till 8:15 Central, which is like literally an hour and 15 minutes from now. S&P futures are going to shut down, and then I think currency futures, and there's a couple other futures that are going to stay awake stay
awake
for a few more hours, and then it'll be just your currency brokers, your FX brokers will have your markets open, but the liquidity is going to be so poor. I just want to say that the liquidity is going to be poor in general today. And that's one of the things that you guys have to be thinking about at home if you're out actually trading. One of the things that I mentioned to the chat room just now was, and most people know this just because if you've been listening in this week, everybody kind of knows my stance on the markets. I'm in position management mode today. There has to be some extremes happening, which we can discuss. There's got to be some extremes happening later after the event for me to actually pull the trigger. But for those of you that are not in the ForexAnalytix community, what I've been talking about most of this week was just, getting short Aussie yen, Kiwi yen, Euro yen. I'm short all of those, but I'm short at much better levels. So now I can just manage open positions from here. And because I've been playing these all to the short side this week, and that's how I'm approaching it. How are you guys going to approach today? I mean, are you going to just run out and start trading as soon as that number hits the wires? K-Man, what do you think?
I've got a little risk position on, but it's all small. I don't have any dollars on, barring my very long-term silver. I don't know really. It's all going to depend where risk is going to be trading for what I'm concerned. If the number is holding up better than what the rest of the employment data this week showed, I think risk is going to do pretty well. Guess some dollars are going to rally. Like for instance, dollar yen for a bit, and then stuff like dollar rand maybe come off a little bit on a risk or on a very weak number, but that's one I'm going to keep on my radar because it really looks that the rand is feeling very poorly again. But yeah, in the majors, it's going to be I don't know. I really need to see levels broken really before getting involved. This is one of those days where I'm not really in a hurry to jump on anything. Those, especially with this low liquidity, you never know where the waves are going to come from. So better wait for the actual moves to develop and then jump into anything.
Right. Yeah. No, I agree with you. And one of the things that you and I were discussing, and then we'll talk to Stelios and Steve about what they're thinking today. One of the things that we were talking about in the chat room and in our ForexAnalytix chat room, and you can guys, if you want to see, just what our chat rooms look like. K-Man and I, when we were discussing with Lucas here early on, you can see our comments here. That was about an hour ago. We were just discussing about the fact that the dollar, one of the key components of where we're at right now in this market, the dollar is going to react differently based on the currency and based on risk. And I think that's important to understand when you come into today, especially, if you're trading currencies, because it is going to be probably the most active or the most liquid market that you're going to find today, in my opinion. As you're going to, dealing in some of the major currency pairs. But the euro dollar, depending on what happens today, the euro dollar is going to act a lot different than what the Aussie's doing, or the rand, or, the dollar yen, for that example. So you can't just blindly look at the dollar index and say, I'm going to be trading dollars a certain way, because that's not going to serve you well. What are your thoughts there, K-Man, before we move over to Steve and Stelios?
Yeah, absolutely. I mean, that's what we talked about, and also for people who are trading, everybody has a different trading pattern, and but if you're like a day trader, more or less, or shorter term trader, it's very important to manage your risk as well on a day like today. You don't go with full positions, which you may really regret. If there's an illiquid turnaround at some stage. So be very careful what you do. I like to slice and dice in those markets and get my risk to minimal levels as soon as I can. Yeah, it's a way of trading. And also, yeah, as you say, we have to, when we spoke about it in the chat room, indeed, we have to look at an animal farm approach, like Orwell was saying. Not all dollars will be equal today.
Yeah, exactly. All right. Well, hey, K-Man, thank you for your thoughts. We'll definitely come back to you. Stelios, what are your thoughts here? I know it's Good Friday, and I know it's not your Good Friday, because your Easter is a weirder Easter.
You don't have to worry about it. Stelios and I have no Good Fridays.
So what are you thinking here, Stelios, as far as liquidity and volatility goes today, and what's on your mind?
Well, for people who know me or have heard me speak over the years, I think you can probably assume that I won't be trading today, unless something huge happens. And by huge, I mean unless payrolls surprise to the upside in a big way. That might make me consider changing my positions a little bit, but I still think the risk is for a disappointment in the number. So I think 90% chance I'm not going to be trading today. I'm going to see where we open on Monday. But, if, like you said, for people who trade more short term, definitely just try to manage your positions and keep risk low. I mean, that's what I would do.
So metals, the CME and Globex has some, the metals will be trading at least for the next few hours. What are your thoughts here? I know you're really bullish silver, and you've been, really the last few weeks, and it's paid off well. We've broken out to the upside on a weekly basis. You can see silver really making a move. What's going to extend these moves higher today for precious metals for you?
Well, obviously, I think a miss in the number is going to give more fuel. The problem is that the market's gone quite fast, quite far. I haven't seen the latest DSI numbers, but I'm sure they're 80
I want to say they're 80, 85, yeah. Or they were 91 earlier this week, so maybe they're like 88. I have to. Well, let's see. We'll go to the ForexAnalytix chat room and let's check the news and research room. And you can see all the headlines that's been posted here. This is from yesterday. So the daily sentiment index for silver is 85. So there you go.
Yeah, so it's stretched by most measures. That doesn't mean it can't go further, but I think we've arrived for a correction. I mean, if we do see a weak number, we really have to break above those highs that we had a couple of days ago. But you know me, I have at the moment 2 positions, one from 21.5, one from roughly here. So just under 25. I have my stop for the second trade at 24.55. That gets hit, so be it. But I'm going to wait to see what the numbers are. But I have to say, the whole environment for metals is very good, but a pullback is likely. It's very good. We've had a lot of tightening. We've had a lot of dollar rallying. Of course, it sold off recently, but overall, it's been a situation which we hadn't seen in years, right? This fast tightening by the Fed, and I must say, metals, especially gold, have taken it really, really well.
Yeah, that's I'm sorry, AJ just said only SPX, Nasdaq, and Forex for TD account holders. Do you have Thinkorswim? Just curious. I haven't pulled up my Thinkorswim.
I cannot trade metals either, on my accounts.
Oh, you can't, or you don't?
No, I cannot.
Or you cannot. Okay, so maybe that will be limited today. It's a weird holiday this year, because most of the times Good Friday, everybody's off, like everybody shuts down. The BLS putting out their data today is abnormal, or at least I don't remember it over the last 7 years of trading. But it's one of those situations that it will be hit or miss, I guess, with the broker you're trading with. Anyway, let me ask Steve, what are the chances of the US posting a good jobs report? I mean, I think all signs point to a weaker report today. I'm gonna talk about how I'm gonna approach that if we do get that. Well, we'll talk about different scenarios. But Steve, how likely are we to have a strong jobs report? I mean, it would make it actually the 12th jobs report number that comes in strong if it beats the headline number. So what are your thoughts?
As I've said a million times, I'm not in the business of predicting a single number, right? Because they can be volatile.
It's definitely
but given the prior numbers we got the previous days, yes, I have to agree the chances of that being a good number are rather limited. Now, of course, in my opinion, the market is going to probably overreact to a number that's going to be bad, not worse, because the market, I think, has already priced in that the number is going to be worse than the ones we had. But the question is, how much worse is it going to be? If it's just slightly worse, that's going to be more or less a neutral outcome. Now, the thing is that the most important thing here is that the market in general has started pricing in a new reality. And what is that new reality? The new reality is a Fed that will have to pivot. The market has been trying to price that in for quite some time, unsuccessfully. But nowadays, they might actually have some valid arguments in calculating this in, right? Because if the jobs data start getting worse, which is now a likely possibility, in combination with the fact that we already saw the side effects of raising rates after building an economy that cannot handle them, because the problem is not higher rates, the problem is the underlying economy that has been built that should be able to just do fine with 5% rates, but can't. And we saw what almost happened with the banks. They backstopped it for the time being, but we saw what almost happened. So the market might be right this time around, and this is going to be a big game changer. So I think that the dollar is in a very hard place.
And and let's talk a little bit about the reaction here on a good or bad number. K-Man, you're still here, right? Yeah. Oh, so let's talk out a couple of scenarios here. Let's discuss like this bad number scenario, and the data is bad. Is bad data and a weak? Let me clarify. A weak jobs report headline number. The market's looking for 240,000 jobs. Let's say the number comes in at 100,000 jobs. It's it's pretty big miss on the headline. First time in 11 months. How do stocks take that? I mean, is bad still good, or is bad bad?
define define bad, and I agree on Steve as well, with Steve saying that the market has already started to price those things in. Yeah, we saw those weaker employment data coming out this week. We had a miss on the ISM. So the market has already started to price in that stuff, and that's also why, for instance, on the US 10 years, we came to rest on the big support. We're trading fractionally above right now, but so it's going to take a bad number to make things worse, if you see what I mean. And so I guess that we are going to need a number 100K or below to really put the wheels in motion, and where you're going to see the yields fall, and then perhaps the initial reaction will be lower yields and a bit higher stock market. But then I'm going to do exactly what I did earlier this week, and if we get that jump in the S&P back to mid 41s, I think bad will be bad in the end, if it's really bad. I think anything between right, let's say 150, 250K will not shock the market. Even actually, if it comes out in line with expectations, that will already be a bit confusing to the markets. And if it comes out higher, then it's going to be the surprise trade, and then probably risk is actually going to do very well together with the yields. But
could I ask you a question
yeah.
there? If we had a number that was in line. If we had a number that was in line, K-Man, wouldn't the market feel more relieved?
Yeah, I think it may be good for risk. And and for instance, well, S&P may drop at first, as yields will likely spike a bit, but then I expect an opposite reaction and stabilize and actually do relatively well. And that's how we started to trade roughly since the past week or so. And I think this scenario is to me, in my mind at least, going to be relatively likely. The thing on a decent number, I can see if you bring it down to F.A.C.E, I can see risk trading pretty well, and that means stuff like. But then I'm rather going to look at process. But stuff like yen process may pick up a little bit. I think it's going to be relatively good for things like Kiwi, for instance, where the market will remind itself that the RBNZ has raised 50 BPs. Kiwi is a bit of a risk currency as well. Sterling could be one doing well as well if we get a equal or beat of the numbers. On a bad one, then I really think dollar yen could really put pressure on that 130.40.60. Yen crosses will likely go lower, also because Kuroda gave his last during his last appearance in the diet today, said they might actually be on their way to realize the 2% inflation target. So he's preparing the terrain for his successor. And I think if you really get a bad one, yen should be one of the big beneficiaries of a really bad number.
Isn't that wild, K-Man, that like Kuroda literally packed up his bags? He like, I can just see him in his office and grabbing like, the pictures from behind his desk of his family and, grabbed his bottle of whiskey from underneath the desk and, like put it in a box. And
you're assuming that the Japanese guy drinks whiskey, eh?
Oh, he probably drinks
instead of sake.
That's he's drunk like he's like drinking bourbon, when he's at a lot of these meetings. But let's, and he's got his like little like succulent, cactus plant, and he throws it in a box and he walks out. And isn't that wild that Ueda is going to be walking in with his box of crap Monday morning? It's wild, isn't it?
I think that once Ueda walks in on Monday, the office is going to look a lot cleaner because there's going to be a lot less leftover sake barrels hanging around.
Hey, well, hey, K-Man, that's a great plan of action today. I'm going to talk, just before the data comes out, I'll talk about how I'm going to approach the market. But Steve Stelios, do you have any like ideas? Like if something happens today, what would provoke you to trade, and what would you trade? So let's start with you, Stel. If something happened today, what would it have to be that would happen that would get you in the market, and what market would it be, and how would you do it?
Yeah, well, the choice is very limited, so I can't trade my silver or anything like that. So you have to do something of a proxy, and ideally, I think you want to be trading, if you want to be trading risk. So if you think, the market's going up or down based on the number, you probably want to be trading cryptos, but that's a different story, right? You have to have an account on an exchange and all that. I don't. So for me, unfortunately, it's very limited. So I would just trade something simple like the euro dollar. So I would just trade the dollar against a liquid currency. So the euro dollar for me, and I would only trade it if the number is really strong. So if it's really strong, I would just sell a little bit of euro dollar, just as a kind of partial hedge against what I have. But
So if it's a really, really strong data,
so let me give you a number.
You'd be a
Let me
seller
give
of the
you-
euro dollar. I
Yes.
want to point something out really quick, for those of you that haven't seen. The one thing that makes me a little nervous about euro longs. This is the 2021 high of May. That's the 2023 January highs, and then this week we're threatening to close, either above or below that trend line based on what happens today. So, let's just take your scenario, Stelios. We got to get a strong number. Theoretically, on strong data, you would see the euro crack this little alarm that I have here, but you would see us, trade below, 108.80, and then next thing you know, you got a false breakout, and then everybody who's long euros is like they're holding the hot potato, right?
The cable is actually similar because we've broken out of a channel, but we're really close to it. So if it's a strong number, and by strong, I mean if it's something 250 and above, we're expecting what, 239, 230, 240, 250 and above. I think we're going to see a move, and I will be looking to sell either euro dollar or the cable. They're both, I think, technically looking ripe for well, the euro is. The cable has to break back down inside that channel.
All right. Well, that's and the cable. I know we've been talking a lot about it here in the ForexAnalytix community. I think if we get it below 124, you're going to have a lot of disappointed sterling bulls at that point. I mean, there was just a report out. It came in probably better. Would probably remember this better than me. There was wasn't it Goldman that put in a 130 target for sterling this week out. They put out a recommendation. It's either them or one of the big banks. I believe it was Goldman, but anyway, a lot of people would be bummed out if the cable didn't break out, if it did a false breakout. So I think you're on a good one there. How about you, Steve? What would provoke Steve Volge to trade on a Friday, which is a Good Friday, which he doesn't even care about? But in a situation like this, what would provoke you to take a trade, and what would it be?
I have no idea. I mean, I can't think of a scenario, but you can never think of all scenarios. You know what I mean?
Yeah.
So at the moment, no scenario that's likely comes to mind that would, get me to take a position in an illiquid market that might open with gaps on, a couple of days later. So yeah.
All right. Well, I'll tell you what I'm thinking. Going into today, remember I'm in trade management mode. I have no dollar positions open. That's how I planned it all week. Anybody that's been in the ForexAnalytix community, I've walked you, handheld you through this week on what I'm doing and the positions I'm in. But what would provoke me to trade is a really bad number, because I feel that a bad number is going to, and when I say bad number, like the market's looking for 239,000 jobs. We've hit the last 11 jobs reports. We've come in, well above expectations. And this is, if you've been around here for a while, this is the first month that I've actually felt nervous about the jobs report. Every month for the last, at least the last 6 months, I'm like, no, our jobs market is really strong. I think we're going to have a beat. Even if I guessed like a lower number, when we cover this live here on the F.A.C.E show, you guys know I've always been like, no, I think the number is going to be a beat. And I think the U.S. economy is actually starting to show some anecdotal evidence of really, really weakening and a lot faster than people expect. And so I don't know if it's going to show up in this month's data. Definitely, in my view, it'll be next month's data, if not this month's data. But if we do miss that number, and that number comes in, let's say it comes in at 100,000 jobs, maybe we create no jobs, or maybe we create 50,000 jobs. If that number is that weak, the initial response that you're going to see out of the market universally is going to be dollar weakness. Excuse me. You're going to see the dollar weaken predominantly. Now look at the dollar index. The dollar index is very close to trend lows, but I also believe the dollar is very close to becoming a risk aversion tool again. So if the dollar gets hit and we see the dollar index like push below, these trend lows, I think it's going to pop right back up again. Now, again, not all dollars are going to be traded equal. So I'll be looking at the Aussie, because I think the Aussie is really one of the worst performing currencies right now in a dollar selling environment. And if you look at the Aussie, and it has more to do with the RBA and risk, and probably sprinkle in some China in there. But if the Aussie spikes back up towards 68 cents, I am going to be a seller today. I won't be a huge seller. And let me make sure I express this to you all, everybody here. I'm only trading about a quarter of my normal size today. And any new positions that I open, I will not be opening full size positions. I will not be trading over leverage. I will not be doing anything like that. The market's going to be way too thin, way too illiquid, and way too volatile. So I'm not willing to put myself on the line. And I hope you guys understand why, because it's going to be really thin today. So any big move up in the Aussie today towards 68 cents, you're going to probably hear, you'll hear it right on my account. You'll hear it start pinging, because that's what I'm going to be selling. And the other one that I was thinking is the dollar Mexican peso, because this is a risk off currency. If the market goes like, bad data is bad data. We didn't create any jobs. We created very little jobs. Maybe some of the other, data that we get today, maybe some of the income data, the hourly earnings, comes in worse than expected, whatever it is. The dollar Mexican peso is near some really, really critical support. Matter of fact, this red line, K-Man, you're the one that actually put that one on my screen. This long-term trend line, you can see this long-term channel. And also the dollar Mexican peso is trying to form a higher low, which isn't, telling you there's a trend change right now, but it's trying, and it's trying like hell, because I've been a Mexican peso bull, thinking the dollar Mexican peso is going to go down pretty much all of last year. And this year, I'm a little bit more nervous about that trade. I think I think the dollar Mexican peso could very easily get back to the 200-day moving average. So bad data, dollar Mex trades down towards 18. I might be buying it today. Hey, we got about a minute, 2 minutes before any last minute thoughts. K-Man, Stelio, Steve.
We need to remember we also have average earnings, which are important. They are projected to drop in line with kind of the inflation drop that we're seeing. So definitely worth watching that as well. And I guess the question we need to ask ourselves is, on a weak or a strong number, what do stocks do? And I think we're getting to the point now where, let's say on a really weak number, obviously yields drop, and this is usually good for risk on, at least in the new normal. I think now we're getting to a point where, yes, this will be the knee-jerk move, but the markets will realize that bad data means less employment, less spending, less economic activity, which is bad for stocks. I mean, at some point that has to come back to the old normal. So, I'm still a seller of stocks, not here, but, if the S&P gets anywhere near 4,200, 4,150, 4,200, like Kay said, I think that's not a bad place to be.
What you're saying, Stelio, is obviously
crazy.
Obviously true. We have to be cognizant, though, of the fact that until the market starts getting really worried that we might be headed for a full-blown recession, anything that increases the likelihood that the Fed changes policy and becomes more accommodative is going to be initially is going to
we
be.
got just a few seconds, Steve.
It's going to be initially faced with,
data should be out. Sorry,
Let's see.
Steve.
Let's see. Oh,
dollar yen
236.
is-
Well, that's in line.
Whoa,
that's in line.
It is in line. It's in line.
And revisions
Probably good.
The revisions
don't change much either.
Yep.
What
Wow,
about
look at the
average?
euro just absolutely
Also
getting
keep in mind,
clobbered right now.
also keep in mind, I've noticed that a lot of times, a lot of algos in the market that like to respond to the headline number, and the headline number dropped to 3.5. Keep that in mind.
Yep, and participation increased by 0.1 as well. So that's really healthy.
Mhm.
That's not bad.
And-
Yeah.
Okay, anything else? Any other comments here?
Does anybody see the year-on-year average hourly earnings number? It's not out yet. Well, the month-on-month is in line. So
Average hourly earnings?
So I think practically it's undeniable that the number came in much better than what the market was bracing for, right?
Yeah, that like we said, inline data produced a big result and a relief. This is a relief rally.
Yeah.
But look at
the euro
reversals that we're seeing in currencies. I want to share with you. Look at the euro. We spiked all the way down to 108.87, and we just popped back up 30 pips. I mean, these are really very illiquid moves that are happening right at this moment. Look at the 1 minute chart. I mean, very thin, and you're just watching prices skip around. It's very thin, because there's only K-Man, myself, Steven Stelios aren't, and there's like 3 people in our chat room and maybe 4 other people in the world that are actually trading right now. Just kidding. I'm joking about that, but we are seeing a really, really thin moves as expected. So, K-Man, what are your initial thoughts here?
Should be decent for risk. This kind of number. We haven't seen the year-on-year earnings yet.
Yeah,
but the rest is good. The rest is no panic at all. As Stel already said, participation rate higher, a tick lower on the unemployment rate. I think this is pretty decent for risk, this number, and I must say I don't really know what to do with the dollar as such in the majors. I'm staying out, but I'm planning on selling perhaps some more euro kiwi also on this number.
By the way, the year-on-year has been reported 4.2.
4.2.
So
4.2. Okay.
So
Not
0.1
sure why it
lower.
didn't pop up there. I probably need to refresh that. But all right. Well, and I agree. I mean, this is probably the data came in line basically, but unemployment rate actually ticked down. So I think that next month is probably going to be the month that we start to see data really roll over. But it is a relief to the market, and you're seeing equities, rally. You were just talking about the euro kiwi, selling the euro kiwi. That should come down a little bit, I would think. In this type of environment, you would see the euro kiwi come off of this big, wedge that you see here near these 52-week highs. Stelios, what's your initial thought on this move?
Sorry, I'm just looking. Yeah, Tony, what did I say that's funny? I don't get it. Anyway, yields are popping a little bit, but not that much. I don't see any major moves here. We'll have to wait to see on Monday.
Yeah, it looks like Easter might start early. Steve, any thoughts here?
And by the way, I said that the number came in line with expectation. I don't get why people are quick to laugh at stuff. I don't get it. If you don't like it, don't be here. Anyway,
I don't think you should even.
I'm switching off. I have to go. All right.
Okay, mate.
Yeah. Goodbye.
Bye, mate.
Steve, any initial thoughts here?
Definitely a much better number than the market was bracing for, as I said before, and that should give some relief to the dollar. Now, having to do with equities, theoretically speaking, that should be negative for equities, but we don't see that type of a reaction yet. So it's either that the market is convinced that this is just a very short-term blip, but it's weird because we've seen that, of course, multiple times in the past. It's like equity traders are currently trading a different number than bond traders or FX traders. I mean, this can't be both a relief for the dollar and risk positive, because we know that the market has been hoping for data to start worsening somewhat for the Fed to do a faster pivot. So I think there is a danger that equities might reverse, later in the day. I mean,
well, later in the day, we only have
I
in
know.
the day is going to be the next 40 minutes from now. So
I mean, within the next few minutes, or we might have a rethink and open lower next week. That's also a possibility.
yeah, and that's when everybody sits on it and they're like,
and they're like,
about it. Yeah, exactly. And by the way, I don't. Do you want to see something wild? And I know K-Man's looking at this. Check out the Rand.
USD,
this is a 1 minute chart. K-Man, are you watching this?
Yeah, I'm watching it, but I didn't get any good level to enter anyway.
Yeah, I know. I there's no way I'm going to trade. I trade the Rand quite actively, and so does K-Man. There was no way I was going to try to pick that up on a day like today, but just to see this.
It's a wild move.
It is
a wild
great
move,
because here's the dollar max. This is one. If we would have seen 18, the figure today, I would have been on the bid there. But I don't think it's happening. I got a question like, what do you think the Rand pair or the Rand pairs? I'm sorry, somebody asked what the yen pairs are going to do. I think they're going to be relatively well bid right now. I mean, at least throughout the course of the day, I don't see them really moving a whole lot. Like I'm short these yen pairs, but I'm short from much higher prices, and I think they're just going to kind of muck around a little bit. But if Steve's right and you start to see futures like sell off by oh man, the cable is going to get rocked here. Oh geez. But see, the problem is you got all these false breakouts.
I think dollar in general might get some kind of a violent relief. Oh, by the way, equities are reversing already, Blake.
Yeah, I know, and I was trying to finish my thoughts here. If we start to see the equity markets give it up just before, where they close at 10:15.
I mean, it makes sense, right? It makes sense if you think about it. Dollar going higher because of good data, and at the same time, equities rallying because of good data doesn't calculate, right?
Yeah,
doesn't compute.
I'm just trying to find when the hours are for Globex. I have them in the chat room. I have to go back.
By the way, Aussie USD breaking down from the corrective channel. So this opens more downside for the Aussie. Technically speaking, I think this is one of the interesting developments of the day, along with, as you said, Blake, the cable practically reversing back in the previous channel if that holds by the end of the day.
Yeah, I was looking for the comments that we had yesterday, and I'll have to find them anyway. You guys just take a look at futures. They'll be closing, soon. So watch the S&P here. I mean, the S&P is trying to
reversing, obviously.
Yeah, let's see if the dollar will actually show a little bit of reversal here. The euro, the dollar yen spiked up, but it's going to spike right into resistance. Cryptos. Oh,
we had talked about this massive support.
Here's something
yields.
Really interesting with cryptos. Take a look at Bitcoin. We're right on wedge support. What if that starts to break down?
But by the way, Blake, we had talked about the bad risk reward of chasing yields lower at the 3.3%, 10-year US yields lower, 3.3 massive support. And as it seems once again saved by the data, the 3.3% on the 10-year yield is producing another rebound from here. So I think this is also technically very, very important that we held there.
Yeah, we did. All right. Well, guys, I think we're pretty much done. Gavin says, equity futures 9:15 a.m. So that's going to be literally in about 30 minutes, the equity futures are going to close down. Rates and FX, they'll close at 11:15 a.m., which is, you know, about an hour and a half from right now. So just keep that in mind as you navigate through today. Be careful open positions, be careful of the volatility. Cayman, you have any final parting thoughts here?
No, not really. I'm a little surprised that Risky is not doing even better on the FX side. I see. I just added a little bit to my Euro Kiwi here. Yeah, this is should be relatively risk positive, or perhaps just confusing, as I said in the chat room before.
Yeah,
coming out as expected, maybe just creating some more confusion. Let's see. Not inclined to do really much right now.
Personally, I disagree with that, Cayman, and we usually are on the same page. I do think that this is a risk negative, the number I'm in, because yeah, I do. I mean, I don't personally think it's a risk negative, but I do think that the way markets react, that makes sense that the market reacts negatively to this number, because I think the market is hoping for worse data, not horrifically worse data, right? Because then it will start to have to price in a recession, but we're not there yet. For the time being, the market participants do want data that's going to be bad enough to force the hand of the Fed to do a faster pivot. So I think this data does not help in that direction. So I think this might be the beginning of a little bit of a reaction higher for the dollar and a little bit of a reaction lower for equities. But my medium-term prediction is that that's not going to last long. I don't know if it's going to last for a day, 2 days, a week, or 10 days, but I do think that probably the rebound that we're going to see for the dollar, and I'm more confident in FX, so I'm going to stay there, is going to be short-lived. I do believe that rebounds in the dollar should be sold, because medium to long term, I think the dollar is headed much lower from here.
Yeah, it makes sense, Steve, what you're saying, indeed, yeah. The only thing that I'm seeing now is that the market looks confused, because the S&P is going nowhere, right? It's actually rising like a tick or two, but not going anywhere really fast.
I think market participants will have a couple of days to absorb the information and take a decision, you know, of how they want to, react to it in the week ahead.
We may see the reaction only coming in Monday or Tuesday, right?
Yeah.
And then we have CPI as well.
That is true. And that's going to play a very important role as well, because we know that it's a key metric. These are the two key metrics for the Fed, right? Inflation and employment. So we already got employment behind us now. It was decent. So it's CPI now.
You know, we got these false breakouts in like gold, sterling, the euro, just so you guys, just a quick refresher before we go. The euros, this is a long multi-year trend line that's coming. We're going to close back below it, or basically on it today. Cable is going to close back below 124, which is, if we close here or lower, bulls are going to be a little disappointed. I was just looking at some cryptos here. You got Ethereum. If we start breaking down in Ethereum or Bitcoin, that's going to be a little bit risk off. They'll be a little risk negative. I'm not doing anything in FX right now, but you look at currencies like the the dollar CAD. If the dollar CAD starts picking up some steam here, that's another thing that might signal that we're seeing a little bit of risk aversion. So I don't know, guys. I'm not doing anything at the moment. I'm just staying in what I've got and trading it the way I am. But I want to say, everybody else, thank you for listening in today. Make sure you check out the Trader Funding Program if you want to figure out how to be inside of our community. The ForexAnalytix community. One of the ways to do it is trade our money and not risk your own money. So check out our assessments, because when you take an assessment, you actually get included in our community, so you can see what trades I'm taking. You can see what trades everybody else is taking too, not just me or K-Man or anybody else. It's like all of our traders, and you can have just a place to be with like-minded people. Or, check out ForexAnalytix too, just alone. It's $1 for 10 days just to try us out. So make sure you do that. Guys, I want to wish you a great long extended weekend. Happy Easter to those people that are celebrating. And I want to say, just be safe, be good. We'll see you on Monday morning on the F.A.C.E show at the same time.
Happy Easter to everybody.
Yeah, happy Easter to those celebrating. Have a great weekend. Stay safe.
Yeah, thanks for being here, guys. I really do appreciate it. And I know the traders at home really appreciate it as well. Be safe. Take a lot of pictures with your family. If you're with family and friends, take pictures, make some good memories. Because that's what lasts forever. All right, talk to you on Monday. Have a great weekend, everyone.